The Chinese market is good, is growing. We are relatively weak because of semiconductor shortages, which we are hit more in China than the rest of the world. That is why we are losing out market share. I just this morning already had a call with my colleagues from China. They are pushing for more semiconductors, which is really a big concern. After we expected to get a better supply after summer holidays, but as in Malaysia, COVID is hitting quite strongly, so we have another shortage now, and hopefully we can recover in the last quarter.
You said before the summer break you know more about when bottlenecks will ease when it comes to semiconductors. So is that the update?
No, exactly. Well, we have been talking now, and we were expecting and hopeful that after summer break we should have better supply. But then Malaysia, where the back end of semiconductor manufacturing mostly happens for most of our suppliers, was hit hard. Situation is improving, and hopefully towards the end of the month we should be better already, and then recovering. But we had this situation quite a few times, no? First quarter, second quarter, third quarter, and hopefully now we recover in the fourth quarter.
What is your expectation? When will these bottlenecks of especially semiconductors really be easing? Because we're not talking about months here, right?
Yeah. I would say the most imminent and the dramatic impacts we had suffered should come to an end now. No, as we are overcoming COVID and most of the country's supply should be better. We will face a general shortage of semiconductors because the Internet of Things is growing so fast. So there will be constraint, which we try to manage. But semiconductor will be short supplied probably for the next year or so.
What does it mean for your margins, though? Because clearly we're currently seeing that commodity prices are going up. You have to do something with that as well. And at the same time, there's pressure to keep margins.
There's pressure. A lot of price increases, not only semiconductors, but also steel, commodities. We are able to, let's say, also improve our pricing. We're improving our mix. We work hard on the cost side. So far we could keep margins even higher than before the crisis, and we are working on that.
Well, some fascinating comments there, not only on pricing and margins, of course, but on the state of the supply issues around semiconductors. Annette is with us from the Munich Motor Show and conducted that interview, of course. And Annette, more interesting, I guess, for our audience will be just what the views are on the strength of the Chinese economy and the opportunities still there for these German manufacturers, given some of the recent news flow we've had from China around the crackdown on tech companies and maybe some of the weakness now in the credit impulse.
Yeah, exactly. But I think manufacturers and especially car makers do still assess the situation in China to be very good for them. And that's why the market is so relevant to big car makers such as Volkswagen. Volkswagen is earning almost half of its profit in China, and the growth prospects are extremely good when it comes to when you look at who's actually owning cars and what you can what kind of market potential you have, and that's completely a different picture in other parts of the world where the markets are more saturated already. So, but the point on tech regulation, that was actually what was interesting to me as well, and I had to ask Herbert Diess because they are of course in the business of collecting data, whether they are concerned of more regulation for them as well to come, given that the Chinese regulator is going tough on tech companies. Take a listen of what he had to say.
We are very strong in China. We are by far the biggest manufacturer, and we are adopting to the Chinese situation. China has its own ecosystem with the own tech companies, and in China we are working with the Chinese tech companies, so with Chinese map data, and we are used to also let's say deliver the data Chinese government needs. So it's nothing new for us. It's probably becoming stricter, but we're going to adopt. We will see two different ecosystems in the Western world and China, and we have to be competitive in both.
Let's talk about your competitors, because clearly we've been talking about Tesla a lot, which is the competitor more or less for the higher, or the more luxurious cars. But there are also new Chinese, smaller producers of smaller cars. So how do you feel? Is it getting more competitive in your markets?
It will get more competitive because we think that, we strongly believe that mobility, new mobility, electric mobility will grow, and also will be a huge potential for growth and earnings for the tech companies. This is why everybody wants to become an automotive manufacturer now, no? Because the future is bright. So competition will be tougher, and we will have to face new competitors. But Tesla shows also that it's not an easy entry. It's not a typical tech game where in several months you can earn market share. You have to build up structures, plants, sales organizations. It takes you years, no? And Tesla is probably the most prominent and the most successful. But other competitors also take a lot of effort. And Tesla would have invested by now, I don't know, 15, 20 billion. And everyone who wants to participate has to invest similar amounts of money and spend a lot of time and effort. So it's not an easy game to become a significant automotive manufacturer worldwide, but it's possible. And if you wanted to be one, it's now the time to enter.